And Ajay Srivastava, CEO with the Dimension Consulting, joins us. Ajay, you're looking different once again, my friend.
Good morning. The world is looking different, isn't it?
Is that the reason why you joined us late today? You telling your dealers, you instructing your dealers to buy and sell?
I tell you, no buy or sell. The level of indecisiveness is amazing, you know. It was such a comfortable life till Friday, and suddenly God said, you can't be comfortable, we're going to jerk you out of your somnolence, and we are back to volatility, back to uncertainty, but with lot more confidence.
You know, historically, like they say on Wall Street, volatility and uncertainty is investors' best friend. So how are you using today's volatility and decline to your advantage? What are you buying?
See, we are very clear in our mind that we will keep, we may not be buying immediately till the market settles down, but very clear the healthcare space we are not going to sell into. We'll buy into the space. IT, I think Ashwini mentioned, should be bought into if there's a severe correction. Things like Tech Mahindra, where we have holdings, we will buy into those stocks. There are a number of smaller stocks with domestic stories playing out, things like Dabur, things like Rallis. We should add to our portfolios on that if we don't have it on. So it's not all sell side. I think there's a lot of opportunities sitting in the market, which are two things, characteristics. Debt-free, by and large debt-free companies, by and large domestic-focused companies, or export-oriented companies. I think leverage companies with dollar debt on the balance sheet are no-go, of course. No prizes for guessing why. And, that's why I said we go a lot more confident compared to last year in May, June, when everything looked to be going down.
Ajay, but would you stay away from banks as well as metals? Because if this currency rout is going to continue, the wave is definitely not going to be favoring those two sectors.
You know, when you say the rout currency, I still believe that what happened in the last 3 years signals that the central banks will move to stem it. Whether Fed will move or not, because the Fed is mostly focused on the US, I'm not sure. But the central banks will move to stem it. I think the Mexican government has taken a stand that 3% devaluation is par for the course. We will let it ride it for the time being. Banks are better prepared to handle it. So I think a knee-jerk reaction perhaps not warranted. Over-optimism, I think, is the killer in the market. But saying specifically banks, I still believe that there is value in certain private sector banks which will come to the fore if there is a severe correction, and I can name them like things like ICICI Bank. I'm not naming HDFC Bank after a long time because I think there's, saturation stuff happening there. But things like ICICI Bank, maybe even a Yes Bank could come true. But having a caveat here, what we don't know, this $38 billion raised by the banks, how much of 38 billion was genuine fundraising and how much was round tripping of the money? Even RBI hasn't told us this. So the so-called 38 billion defense is actually could be only 5 or 7 billion defense. So we're trying to unravel that number and then come to the conclusion whether banks remain a stable bet. But I think if ICICI Bank comes to about 950, it looks to be a good bet to buy into.
Let's talk about Rallis, something which you recommended last time as well. I looked at the Q3 numbers. I like those numbers. Margins have expanded. Top line is also okay, and PAT was also okay. But post numbers, Rallis is down by 25 rupees.
Correct. You're absolutely correct, and I think that is where I keep saying that lot of, and I'm not alluding to insider trading at all for a minute, but maybe that's so, that lot of buying in Indian market happens pre the result on so-called informed buying, which is called in the market, and these people sell out when the results are out. That's exactly happened to the Rallis stock, and therefore one has to discount this, sell-off which took place post the result. And let's be honest, the results were astoundingly good compared to what the market is expecting. Now is the time to come to start accumulating back rallies. You don't buy in the euphoria of rallies. You buy when the market has corrected itself, it's gone to base zero until the next result comes in. So the correction was due, which is true for most stocks in India, that the sell-off happens post a good result, as happened in rallies. Stable buy, agriculture economy is booming, but their products are doing well. It's almost a debt-free company. So it's, a place where you want to be.
Ajay, names like L&T have actually impressed the street this past week. Anything from the cap goods space which interests you?
You named it. We started building a position in L&T, and I think the premise here is that in the next 2 years, their order book which will come from overseas should be higher than what they are dependent upon in India. I think that's the premise of our buying, one. Number two, they will unravel all the subsidiaries that they have, and therefore hopefully unleash value post the bank license, which definitely should come their way. So there are a lot of positive element building, and if rupee depreciates further, the West Asian contracts are going to give them better realizations. So lower reliance on India, West Asian contract giving dollar earnings, a bank license on the way, maybe some sale of subsidiaries and projects, look to be a good potent mix for a good healthy 20-30% run-up in the stock price.
Ajay, it's unfortunate what's happened to the Tata Motors managing director, but we know that in business personalities matter, and he was responsible for a big turnaround factor in JLR. Do you think now Tata Motors could struggle? I'm not trying to smell a business opportunity here, but I'm just trying to gather your thoughts.
See, okay, I'm not sure whether the fact is that he was involved in the Jaguar turnaround, because I think his domain was everything excluding Jaguar. That's my knowledge. I may be wrong and you may be right, absolutely. On that premise, I think it's a wrong day to say that Tata Motors has really suffered, and perhaps a change of leadership could perhaps give it a better lease of life in India. In India, it's become a non-entity by and large, if you'll agree with me, and therefore, it's a wrong day to analyze Tata Motors, but perhaps things could get better. That's all I can say.
Moving on to your IVRCL position.
Unfortunately, yes, and it's made me money. It's not losing me money, but 20-30% IVRCL is not worth the risk you're carrying. You're still carrying the position. Let's see where it goes. I'm hopeful. Again, I'm saying I'm hopeful that what the RBI governor said, that the promoters have no divine right to run these companies and this company should be sold. He hasn't acted on them. If he acts on them, we're going to treble our money. If he doesn't act on them, we'll go on with 30-40% returns.
And to be a contraband, Ranbaxy, whatever could go wrong has gone wrong. 4 plants under suspicion, they don't have a API plant from where they could export. I mean, nothing else could go wrong for Ranbaxy. Are markets pricing in all the bad news?
I don't know what the stock is open today. Okay, if you can get me what's open at in the free market. But I think we were on another channel on Friday, and we said that we had gone long on Ranbaxy in the morning, early morning when it fell 19%. I'm not sure whether it's in the money, out of the money. We will, if it corrects, we will add on position, because the logic is at 14,000 crore capitalization, which is even just about 2 billion plus, there is still a lot of value in the company from the domestic side. If you just shut down everything related to exports, just for a minute's sake shut down, everything is very strong. The domestic story is very, very strong, unless something, really drastic happens domestically. The retail brands are doing extremely well. The network operation in India is very good. So if you just actually cut off the global operations, Indian story itself will be worth $3 billion plus. Remember what domestic formulation valuation Piramal sold for Abbott? I think was it not 18,000 crores, if I'm not wrong the number, right?
Yeah.
So imagine that today the valuation of Ranbaxy is 14,000 crores. Lot of value there. If it corrects, add.
Piramal, and Ajay, Piramal raised 18,000 crore when dollar was at 50. Right now the valuation of dollar is very different. But let me remind you one more thing about Ranbaxy. It's not that the domestic business is doing gung-ho. I mean, they've had domestic issues as well, where about a year ago, a lot of hospitals decided not to buy Ranbaxy products.
See, okay, I'm a little biased on Ranbaxy because I used to advise that company long back for a long period, but take that bias aside. This product's pipeline is so strong that ban was withdrawn in 48 hours flat. I think it is just naive to believe that the products Ranbaxy makes in this country can be substituted overnight for people who are on this medication for years. We're talking of, it's not like a single dosage medicine like a cough lozenges. They are talking of long-term usage of these drugs. So that ban, I think, was a flash in the pan. Whatever engineered, I don't know the answer, but I don't think it's sustainable. They are a very, very strong player domestically. If you look at all the products, brand play. Number two, the retail branding is extremely strong. The Revital itself is a very valuable brand by and large. So, I still believe that domestic business is in a very, very strong footing. There is no other comparable domestic company with a number of drugs as Ranbaxy has in the right areas. So I still believe that the valuation would be a lot higher than what Piramal got maybe 2 years back.
Well, by the way, the Nifty is now down almost 100 points, 6170 is what we're testing. And it's only HCL Technologies which is up by about almost just $3 or so. 14.15 is where that stock is. Even TCS and Infi, which started off relatively withstanding the wave, have now slipped into the red. All Sensex stocks, by the way, are in the red already. Ajay, you just talked about as to how the agri theme is something that you're, pretty bullish on, and you think it is going to be booming from here. In that light, would names like M&M as well interest you, because it is the tractor sales which is going to lead the company higher?
See, the problem with M&M, I love that stock. I used to own a lot of it. I sold off and so on. The problem with M&M is just too many places. And it's got all in the wrong priorities. It's got in the two-wheeler space. It's fighting for traction where it doesn't have. It's fighting for traction in the SUV space where it did very well and lost its way around. It's fighting for traction in the automobile ancillary market, which it has sold off to a Spanish company. So at least that experiment is over and done with. You know, if it is a single focus company to say that 2 or 3 areas they want to grow big, that's fine. The only saving grace for M&M is not the rural story, is the defense story. I think that could play out in the next 2 to 3 years. But I think in the interim, there are a lot of issues which they're coming up. So valuation-wise, you got to be careful as to whether you want to buy at 1,000 rupees or no.
Ajay, Infosys. Now, post numbers, Infosys has appreciated by about 200 rupees plus. Do you think Infosys as a stock has potential to go to 4,000 or even 4,200?
I think yes, and the reason is that its biggest market, the US, that's a market which is booming. Our reports say that the order book is getting more stronger. The cost structure has been rationalized quite substantially. You all know that the entire senior management sitting there was chopped away, so that gives a good rationalization. There's more hunger at the local levels. And the more important, the order book is good in US, which is the main market, and it's expanding. So I think in all parameters, they are doing pretty well at this time, and if rupee continues to depreciate to 65 again, that will give another hedge for next 2 to 3 years. So in all probabilities, see, a 10% to 15% is there for the taking in all these stocks in my view. At the end of the year, I think all the IT stocks, irrespective of which it is, will give you a 20% return from this point of time. And Infosys should be a leader, not the laggard in the system, because there is now more hunger in the younger team which has moved in compared to the earlier place where all the postings were slotted, were there, people were there for 20 years or so nobody was moving there. So more hunger, better in the US market, and rupee dollar in the favor. I think all augurs well for IT and specifically for Infosys.
Ajay, what about the mid-cap end of the market? Because of late, of course, up until, today, you have seen the mid-caps as well prop up. Mid-cap IT, mid-cap pharma, names like Aurobindo Pharma, Biocon have all done very well. And of course, mid-cap IT as well has an endless list. What is it that you're liking amongst the mid-cap universe?
See, mid-cap, the only universe we like always is the pharma space. And the reason is that this pharma space mid-cap has the best value in terms of buyout and in terms of profitability. All other mid-caps, including the IT mid-cap, you will see, they have underperformed the big time in terms of the last 3 to 5 years that you've seen it. Because purely they have no scale to compete against the larger majors. So one, if I were to buy mid-cap stories, and I'm still focusing on, is focus only on the healthcare space, focus only on the formulation and people who are exporting, including services. Biocon, you already named one of them. Now that, again, you have to watch for euphoria. Biocon euphoria went berserk. The stock climbed from 380 to 490 in less than 2 months. It's traveled back to 420s of thereabouts. So the stocks are all good, but you know when to buy into. You don't buy at the end of the euphoria. You start to be patient with these stocks, otherwise you are in the wrong stake. People who bought at 490 or something, Biocon will be rowing why they bought Biocon. It's a good company. But people who bought at 380 and in cashed out will feel better. So it's not about, but I would still say, other mid-cap stories, ancillaries, auto ancillaries, don't do it. That's the one which is going to bleed you the most. You will not get volumes to exit. You will see circuit filters coming into place. And, it's a mirage to say you make money out of small and mid-caps. By and large, everybody I know has lost money more than they made money.
What about the NBFC pack? Even though names like L&T Finance Holdings, M&M, Finance weren't all that impressive this time by way of their quarterly earnings, but purely because of, them being prime candidates for a banking license, would they become buy on dips?
See, okay, I think Mahindra is already out of the race. So by and large, L&T Finance, which will get the license in any case. IDFC will get the license in any case. See, it's a stated policy of RBI in this country the last 10 years is that we want to kill the NBFCs. That's the bottom line. The moment an NBFC comes up, they have a new set of regulations. So if you look at the parameters of regulations, survival of NBFCs is almost impossible in this country on a standalone. What are the NBFCs? All the private equity funds have opened NBFCs in India, trying to get out of the equity return cap by doing this debentures and profit-linked debentures in the step-down subsidiaries. That's what NBFC in India has come down to, which is shadow, boxing with RBI on the returns issues. Standalone NBFCs are like Mahindra Finance. They've already said bank license doesn't make sense. L&T Finance, which doesn't have really a raison d'etre to exist, so therefore apply for a bank license. IDFC will convert to the bank. So NBFC is an industry segment does not have the blessings of regulator and therefore cannot find favor with investors.
Well, that's only one exception, Ajay, Shriram Transport, where private equity guys have come in at the top and even at the holding level. But, you know, a Bajaj Finance, a Mahindra Finance, Aditya Birla, Nuvo, they've managed to grow. And some would argue that in a tough environment, NBFCs, they gain more market share because banks don't lend at all.
You know, for a country like India, can you imagine how many NBFCs we should be having in various segments? You saw what they did to the gold loan NBFCs. They were slaughtered in the market. You know, today you saw all the intermediary companies which are NBFC's main business were intermediary financial products. They cut the commission structure so drastically that all of them collapsed in the middle. You know, so when you say example, you're right, absolutely. Shriram Transport is a very good example to say how you can still survive. But that's exactly my point. That how many names can we even go beyond 5 names in the country like India's size on an NBFC structure? And their focus of Shriram Transport Finance is the major products. But if you look at the American system, look at the European system, NBFCs are the lifeblood of the acquisitions, equity investments, distribution of financial products. They are the lifeblood, not the banks are not the lifeblood. But where are the NBFCs today in India? They are dead because that's the regulator's policy. So point is, you have 3 exceptions or 4 exceptions backed by good quality industrial houses. But is that what the industry should look like in a vibrant economy like India, which is 4th largest in the world? Perhaps no. And I think the regulator should look at it as to why they've killed this industry altogether.
Yeah, ultimately what matters to me and our viewers is that what are you buying? Give me your top 3 ideas.
Oh goodness gracious. Okay. You saw one buying of Fridays already. She announced that it's 7.5% down. So that's a good news for the day, which is Ranbaxy. Okay. So anyway, I think we got to be careful. But I'll tell you, I shared what we bought last time. I don't think so. We have new candidate barring. I think last week we announced one more candidate we started buying into was Fortis Hospital. I think the promoters' experiment with all the global acquisitions, all the investment banking activities is over. They are now become a domestic focused player. Lots of good hospitals coming up. A decently deleveraged balance sheet post-international acquisitions are out of the way. So I believe that they will offer value. It's just almost synonymous that they will go like the PVR way, where quietly they expanded domestically and become a big player in India. I think Fortis should see if you hold on the share, maybe about 2 to 3 times, 3 baggers in a 2 years time. So that's one new one we've added to our portfolio.